Hello, friends. John here from JonFunds AG. What I'm about to show you will change everything. 3 days ago, Shanghai silver traded at a 27% premium over COMEX. 27%. That is $9.12 more per ounce than the New York price. This is the biggest price gap in modern silver history. Western banks tried to hide this, and it completely backfired. What they are not telling you is that China just exposed the real silver shortage Wall Street has hidden for 4 years. Before we go further, subscribe now. I will never ask for money. I will never sell courses. Someone needs to tell the truth. Today, I'm showing you the Shanghai Premium data, the COMEX vault drain, Swiss refiner confirmations, and exact price targets for the next 6 months. So subscribe, hit that like button, and let's begin. First, let me show you what happened on February 17th, 2026. The Shanghai Gold Exchange opened at 8 a.m. Beijing time. Silver for immediate delivery was trading at 286.4 yuan per gram. That equals $42.65 per ounce. At that exact moment, COMEX showed $33.50. Let me repeat that. Shanghai physical silver, $42.65. New York paper silver, $33.50. Same metal, same hour, a $9 gap. This is not some market inefficiency. This is a shortage signal screaming at anyone willing to listen. Western bullion banks have been selling paper contracts with no physical backing, and China just called their bluff. But while Western traders slept, something else happened. Evidence 1. From Reuters in London on February 19th, Chinese silver imports reached 847 metric tons in January, the highest monthly total ever recorded. Read that again. 847 tons in 1 month, a new record. Evidence 2. From Bloomberg on February 21st, COMEX registered silver fell to 118 million ounces, down 23% from December as delivery requests surge. Evidence 3. From the Shanghai metal market on February 22nd, the premium for immediate delivery averaged 24%, above the international spot price for 11 consecutive sessions. And evidence 4, which honestly shocked me. Apple Inc. filed an SEC disclosure confirming a 3-year silver supply agreement directly with Jiangxi Copper Company. Apple is locking up physical silver directly from Chinese miners. Does that sound like there's plenty of silver available to you? Now let me show you the COMEX data that nobody discusses. This is the most important information in this entire video. COMEX registered silver currently stands at 118 million ounces. The daily drain rate since February 1st has been 1.8 million ounces. At this rate, COMEX hits 0 in 66 trading days. That's late May 2026. I need you to understand how insane that is. The COMEX is supposed to be the global price discovery mechanism. It should have a virtually unlimited supply, and it's being emptied in real time. Now for the geopolitical angle. On January 8th, 2026, China classified silver as a strategic reserve metal. That's the same classification as rare earths and uranium, a national security asset. While America debates, China accumulates. Let me show you a pattern that's been repeating every 48 hours. Shanghai opens at 8 a.m. Beijing time and silver rises. COMEX opens at 8:20 a.m. New York time and silver gets smashed down. This has happened 17 times in February alone. On February 12th, Shanghai was up 85 cents. Then the COMEX smash took it down $1.12. On February 14th, Shanghai up 67 cents. COMEX smashed down 94 cents. On February 19th, Shanghai up $1.03. COMEX smashed down $1.47. This isn't random, it's coordinated. But something has changed. The smashes are recovering faster and faster. The February 12th smash took 4 days to recover. The February 19th smash took only 31 hours. The manipulation is failing. One technical indicator confirms everything. Silver lease rates. The normal range is between 0.1 and 0.5%. The current range is 4.7 to 6.2%. When lease rates spike like this, it means physical silver is so scarce that borrowers are willing to pay extreme premiums just to get their hands on the metal. That is a panic signal. The last time rates exceeded 4% was in March of 2020. Silver went from $12 to $30 in 5 months. So let me connect all the dots for you. What the banks did was sell unlimited paper contracts, suppress prices through these COMEX smashes, and claim there was plenty of supply. What actually happened is that Shanghai exposed the real physical price. The COMEX was drained of 23% of its silver in just 8 weeks. Industrial buyers started bypassing the exchanges completely, and lease rates hit panic levels. The ironic conclusion is that the more they suppress the paper price, the faster the physical metal disappears. Their manipulation is actually accelerating the shortage. Here are my specific targets. Short term, in the next 2 weeks, I see $38 to $42 as the Shanghai Premium forces Western prices higher. Medium term, by late April, I'm targeting $48 as COMEX delivery failures start to trigger panic. And long term, by August 2026, I see $55 to $65 as demand from the solar and EV sectors overwhelms the dwindling supply. But there are still unresolved questions. What happens when the COMEX actually hits zero? Will the exchange suspend deliveries? Will China launch its own yuan-denominated silver contract? Now, let me address the risks. I'm not here to just pump your bags. Who gets hurt in this scenario? Paper silver holders, those with unallocated accounts, and anyone who cannot take physical delivery of their metal. Who survives? Physical holders, those with fully allocated storage, and the owners of mining equities. The key question you have to ask yourself is, can you hold it in your hand? If the answer is no, you own a promise. And promises break during shortages. I urge you to verify everything I've told you. Check the Shanghai Gold Exchange website for the premiums. Check the CME Group website for the official COMEX inventory reports. Search Apple Silver Supply Agreement in the SEC filings. You can check the lease rates on a site like Kitco. Make your decisions based on evidence, not on emotion. Subscribe to the channel. Next week, I'm going to reveal which specific miners are set to benefit the most from these Shanghai premiums. Like this video, because the algorithm needs to spread the truth. And comment below, what is your silver target for 2026? Everything I've said is public information. You are responsible for your own financial decisions. Let me leave you with one final question. If China treats silver as a national security asset, why does America treat it as just another speculation? This is John from JonFunds AG. Stay safe and stay stacked.
Quick
See you in the
disclaimer.
next video.
This video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.